Actually coming through. We understand that certain tax changes could hamper foreign portfolio investors. CBDT, we understand, has issued a clarification on the applicability of indirect transfer provisions. Could that be one of the reasons that's added some incremental woes for the market? Surabhi is here with more on what this means. Surabhi.
Yeah, hi Sumera. Well, one's wondering why India is underperforming so much. Maybe what I'm about to share could have something to do with it. Basically, this is a clarification from the Central Board of Direct Taxes, a circular that came out to clarify when indirect transfer provisions are applicable to foreign portfolio investors. What this circular essentially is now saying is that investors who are investing in funds which are dedicated towards India, what is the definition? Offshore funds which are deriving more than 50% of their value from underlying Indian assets. Now, these could be shares of Indian companies, any other form of capital assets. But if more than 50% value is coming from Indian assets, then that particular fund and its investors will be subject to provisions of indirect transfers. Now, what does this mean? Essentially, any redemptions, any buying or selling of units of these funds that investors are engaged in, this would be subject to taxation in India under the indirect transfer rules. This was not the case till now. As of now, investors into funds, let's say there is, I'm just taking a name. If there is a Franklin Templeton fund or any kind of foreign fund which is investing into India, individual investors could be a pension fund based out of a foreign jurisdiction, could be an individual, it could be a housewife back in the US of A. Individual investors were not subject to taxation, but now with this clarification, they will be. There is an exemption. There's a 5% threshold that is being spoken about in this particular circular. What the CBDT is saying is that if the ownership or the voting rights of the individual investor is less than 5%, then he or she will not be subject to tax. But if this individual investor does have more than 5% voting rights in the fund, then the provisions will apply. So tax circles here in Mumbai are abuzz with this, and a lot of people that I've spoken to say it will have far-reaching consequences into the inflows that are coming into funds which are dedicated or focused onto the Indian market.
All right, Surabhi, thanks very much for bringing that to our attention.